Good evening. Welcome to the big question on NDTV Profit. I'm Moza. And on this last day of the year 2025, we're asking a question that almost every Indian household has felt in its wallet this year, because it's a paradox. The paradox of 2025, if you please. We're talking about inflation. Yes, it is at record lows. In fact, in the month of November, the headline inflation was just 0.71%. It's far lower than what the RBI wants as a comfort level. But look within that headline number. Food and prices of some goods, they've crashed because of good monsoons, because of GST reforms. But the service-heavy sectors, that's where we are seeing those prices remain elevated. Housing inflation, for one, almost 3%. If you consider education inflation, that's about 3.4%. Health inflation, very important, 3.6%. All of that means that the essential services, like housing, like health, like education, all of those are rising about 3 to 5 times the headline inflation rate. So this is evident in the core inflation. Now that is the inflation which excludes the volatile food and fuel prices, and that core inflation is still stuck above 4%. And the RBI is saying in its financial stability report that the price stability is back. Growth is strong, they say. Banks are stable. So on paper, this should feel like the best of both worlds. And that's what the RBI governor has indicated. Low inflation, high growth. And he calls that a sweet spot. And yet I say, life feels more expensive than ever, especially in our urban areas. Look at rents. Rents are climbing across cities. If you consider school fees are jumping sharply. Hospital bills, insurance costs, all of these are exploding and putting heavy pressure on the wallet. So going by some of that data, this household spending is up 33% in just 3 years. And this even as incomes, all those wages are struggling to keep pace with the rising costs of living. It tells us something rather important, that India is no longer battling a food inflation problem. Urban India, in fact, is battling a services inflation problem, one that CPI doesn't fully capture. When you're talking about that inflation, then headline number, it doesn't capture where the inflation pressure is coming in, and that's on the services side. And add to that a weaker rupee, global uncertainty as well. There are rising import costs, and wage growth that I mentioned, it simply hasn't kept up with the cost of living. So all of that put together, you get a middle class that feels squeezed despite strong GDP numbers, which is why Tonight is when we're asking about 2025. When we are closing out the year, are we looking at some kind of parity in the kind of inflation numbers that are reported? Because that is clearly going lower. But what about the pressure that we feel on our wallets when it comes to our living costs? Today, that's the big question that we're asking. And to answer those questions, let's turn to our panelists who are joining us. Well, Ghulam Zia is with us, Senior Executive Director at Knight Frank India. Good to have you with us, Ghulam. Siddharth Singhal is also with us, Business Head at Policy Bazaar. Hello. Mitali Nikore, good to have you, Founder and Chief Economist at Nikore Associates. And Abhishek Kumar is here, Founder and SEBI-registered investment advisor. He's part of Sehaj Money. Gentlemen and lady, well, this is an important question as we are closing out the year. Ghulam Zia and Mitali Nikore, first two questions to you. First, explain to us this phenomenon, because yes, in terms of the headline number, we look very easy. But when it comes to core inflation, that's where the stickiness has come in. But how is that reflecting in how households are facing the kind of budget pressures that they are right now, whether it's on healthcare, whether it's on education, when it comes to rents as well? Mitali.
So thanks, Vikram, for having me, and a very happy New Year to you and all the NDTV viewers. So I think it's a very, very clear phenomena as you were explaining it. When we look at two numbers, those two numbers actually explain what is going on around us. When we look at the wage growth in urban India and corporate India, and we've been crunching the numbers for this, we find that it's somewhere in the range of 8 to 10% annual wage growth in the corporate sector, in majority of sectors like IT, financial sector, banking sector, and FMCG. But on the other side, when we look at rents in urban pockets, the urban pockets where these companies are located, the rents have gone up anywhere between 13 to 22%. So, literally, the wages are not keeping up with what you're paying in rent to your landlord in order to actually stay close to your job. So, a lot of what you're earning actually goes into your rent, and of course that explains why you feel the pinch a lot more. Of course, the CPI number, the headline inflation that we spoke about, nearly 50% of the CPI number is based on food inflation, and we've seen this 2023 to 2024. Tomatoes, onion, potatoes, the top commodities as we call them, those were surging. We saw nearly 8 to 10% inflationary pressure coming from the top commodities, but now those have reduced. We've seen supply chain improvements. We've seen the cold chains kicking in. We've seen the logistics sector investments improve. And now we find that there is actually a need to look at how much is the weightage of services, of housing, and other commodities in this CPI number to actually tell us clearly what's happening to affordability.
Affordability, especially when it comes to housing, Gulam, that is a key area of concern. Right now, when we're talking about interest rates, the affordability of buying your own home, that dream home in urban areas in India, now that remains a far-off dream for many. And you're talking about people who are sometimes, and you're seeing these articles, reading these articles, where they're talking about earning in crores and yet not being able to afford a home. So about the rental situation, is this a demand-supply situation that we are talking about? Is there something that is amiss when we talk about inflation numbers down and you see the rentals that seem to be hitting the roof? Where is the reality?
Vikram, thank you so much for calling me on this show. It's a pleasure to be part of these discussions always. And taking it forward from where Mitali left, it's not just the rentals that we are talking about, it's the capital values, which have also been, going completely berserk. In most of the top 8 cities, and since we are focusing on the urban side of this whole problem, the whole range of top 7-8 cities, we have seen the capital values also growing a lot, and not just capital values. Even the product range is also only catering to the luxury segment, the very high end of the market. And the big difference, over and above what Mitali spoke about, the large difference actually lies between, the haves and have-nots, where the upper end of the society is completely talking about all consumption based on wealth creation and asset crystallization. On the other side, most of us, almost about 95% odd people who are based on purely income growth, are suffering. And this entire paradox that you're talking about is again hinting at that. Everybody, all developers, the whole real estate segment, the supply side is catering or creating apartments only in the luxury and upper end of the market, and where again the prices are growing almost about 10-15% per annum kind of number for last at least 2 or 3 odd years. And that is something which is, and when we on many of these platforms, when we discuss, we only focus on what shines the brightest, which is the upper end of the market. So everywhere, like you always talk about somebody buying an 800 crore apartment in Mumbai and hundreds of them buying those 100 crore apartment in Delhi. And again, this is what actually is taking the whole narrative away and not bringing the focus on the masses. Almost 95% of them are not finding the affordable housing that they're seeking. And there's a whole paradox which even again you're talking about. The problem is that the entire thing is so lopsided. Only what is visible is the upper end, which is actually going, at least in housing. Everything is about luxury. The people who are buying apartments, nothing less than 5 crore is available anywhere in the market. 1 to 2 crore is today actually considered to be affordable housing, which is so silly. When I'm talking about houses which are priced 25 to 50 lakhs, honestly, you don't see any of these reputed developers even talking about creating or catering to that.
So the headlines don't capture the real story, where homes for those who are seeking affordability can find a safe haven. For them, buying a home is a distant dream. Rentals have been consistently high. Siddharth Singhal, from the kind of sector that you represent, we're talking about healthcare, we're talking about insurance. Insurance is about security. Now, healthcare inflation is a major risk. It's a major household risk. These medical costs are rising, hitting the roof, but so are insurance premiums. They're rising faster than incomes. And Clearly, insurance should be cushioning families more. Are we really seeing that happen?
Sure. I think, in your question is the answer also. If I talk about the healthcare sector and specifically talk about the hospitalization expenses, the medical, expenses related to within the hospital or outside the hospital, the story is no different. India is witnessing, as per some estimates, that the medical inflation is anywhere in the range of 12 to 14%, much higher compared to the numbers that we just saw or spoke about. As Mitali put it, like say, for example, in a corporate sector, the average increments would hover around 8-9%. But year on year basis, if you look at the medical expenses, one primarily due to a couple of reasons. One is obviously there's a over reliance on the private sector in terms of providing the healthcare facilities. I think what we see is super specialty hospitals coming up. Both in the urban centers and the tier ones. And that is one. Secondly, there's a lot of advancement of technology which has also happened in the healthcare sector. A lot of treatments are now done by the robotic, through robotic surgery, which obviously costs a lot more. There are, in a way, I would say, let's say luxury form of the suites, etc., which are again which is obviously catering to one part of the society. And as the healthcare cost rises, as the average claim size increases for the industry, then automatically the premiums need to catch up, for the insurer to remain in the business. So I think what is happening is what it was put out that if 5% of the customers or the upper strata of the society wherein who's basically driving in a way the luxury. So if I can use that word for, let's say, hospital or healthcare services aspect of it, then automatically it kind of boils down to the next 95%, because then the benchmarking starts with the top one. For example, hospital A, if charging X amount of for a surgery or kind of a treatment, then automatically hospital B, hospital C, etc. will follow in the suit.
Correct.
And then automatically insurance also follows the suit, because as the average claims go up, now we very commonly see claims of 25 lakh, 40 lakh, 50 lakh rupees coming in, which obviously is a big amount of money which can go into a hospitalization. So I think that is what is happening. But I think to be able, and since you mentioned as insurance is now, I would say, is as essential as any food item or any pharma item or a medicine, now that GST is exempted, and that's what the government has also signaled. I think what is driving the demand is a lot of product innovation, a lot of tierization of the product, personalization of the product, so as to it remains affordable for a lot of masses, because that is where the need of India as a country is.
You're saying there is a whole trend of premiumization, and that is pushing up prices of essentials. That has a bearing on savings and investments, Abhishek. Put that in focus for us, because when all these people who are not in that 5% bracket that Siddharth is talking about, who are pushing up the premiumization agenda, what are they doing with their household budgets to be able to save more, to be able to invest more? Because this has a huge bearing. If wages are not going to keep pace, that is going to have a pressure on how much I'm able to invest, right, for the future?
That's correct, Vikram, and thanks for having me on the show, and wishing you and your viewers a happy and prosperous New Year. So yeah, it takes a toll when the wages do not catch up with the kind of inflation a couple or a family faces, because in that case, they're out of money very soon, right? And in that case, we always ask them to go to the drawing board and understand where their expenses are coming out. So to break it down into different buckets of sort, to kind of segregate their essential spend from their discretionary one, and to increase their saving, we always suggest that if their discretionary expense is something that they can curtail, perhaps it's a good idea to start from there and curtail some of those expenses, so their monthly investment could continue in absence of a wage growth, decent wage growth. So that is our suggestion as a kind of a starter.
But is it that much more of a challenge now, Abhishek?
It is getting challenging, more so than because I mean, most of the couples that comes to us are based in urban areas, and as Gulam and other panelists are also saying, I mean, we are kind of catering to only 5% of the total population, and this is the segment which is also feeling the pinch, where their income is going up. Like I recently wrote a post where someone wrote in Gurgaon that he is earning, I'm taking his word for it, that he's earning 1 CR, but finding it difficult to afford a 5 CR kind of property. So it is impacting because ultimately you're also trying to keep up with the Jonases, right?
Of course.
So it does play on your mind. And in that regard, we always say that don't look at what others are doing. Focus on your balance sheet strength, focus on your cash flow, and then chalk out a plan based on that.
But Mitali, tell me now, RBI is calling this a sweet spot of low inflation and high growth. That's the kind of headline. But if people are feeling poorer, for the lack of a better word, is growth really getting inclusive, or do we have to do something differently because this widening gap between what we are seeing as macro data and our lived reality, where is the meeting point?
So I think, Vikram, this is where I think that there is a huge potential for new businesses to come in and start, creating products and services that feel premium but are actually slightly more affordable, because there is a whole, what is very clear from this discussion is that there is a whole layer of people who may not be earning, say, 3 crore, 4 crore a year, but if they are earning, say, 50 lakhs to 1.5 crores a year, they are not finding that kind of goods and services where they can go into the market and say, you know what, I had a good experience, or I bought a good product and it really didn't feel, pinch my pocket. I actually had to pay 600 rupees for a coffee and that really pinched my pocket. I mean, that's what you see in Gurgaon today. You see that most coffee shops in Gurgaon are serving coffees which are costing with GST anywhere between 450 to 600 rupees, just for one coffee. So I'm just saying at this point, there is a whole huge sweet spot that's opened up for businesses who can come in and say, I will offer you a premium service or a premium experience at an affordable cost because I can keep my costs low. I can offer you something which is a little stripped down version of the, full experience. But that feeling and that product will then generate a lot of a lot of following and a lot of loyalty. And if you look at segments like the premium economy segment of Air India, for example,
Yes.
that is a great example of coming in with that premiumization, but which is still affordable for this new upper middle
But it
class.
is still catering to the upper middle class. The problem is in the 95% right now. Isn't that right, Gulam? And to take away from what Mitali is saying, can you create new businesses for your sector, for the realty sector, where you're going to move away from the higher margins that all the premium kind of housing promises to a developer today, and come up with a newer business that caters to the affordable? I mean, that push has come from the policy side of the government, but how many takers are there?
Well, that's the biggest problem. When we're talking about the current market scenario from the supply side, pretty much every developer has moved away from affordable housing. Everybody is actually chasing that pipe dream of premiumization. Actually, I don't even know if there is a proper valid term called premiumization. It's only because you're creating larger apartments. You have created this kind of a FOMO out in the market that you must buy a premium apartment. And especially after COVID, they're asking you to buy an extra bedroom, giving facilities which are actually not even thought about, say, about 7-8 odd years back. And then again, whenever the markets actually peak, again, we see this whole phenomenon of branded residence coming up. So what are you doing? Actually, everybody is chasing that very small segment of market, and they want to believe that it will remain infinite for a very long time without it getting impacted. But it's already showing. The chinks are appearing in the armor. The market is appearing to be peaking out, purely because you're only focusing on such a small segment of market, only creating products for a very select few of them, and you want to believe that this is the whole market. That's where the whole problem is, at least in housing for sure. This entire bug that has bitten all of them, called premiumization, is taking the whole narrative away from what the masses want, and which is what is completely missing. No developer today is willing to affordable housing.
So this is, of course, the truth about the realty sector. If we have to get more real about the insurance sector, you think there could be any moves that where we are seeing some kind of rationalization in healthcare costs and premiums, the high premiums that you need? Because I hear from so many people that they're not willing to get a policy today because it costs so much. They'd rather invest perhaps in the equity markets and bank on that kind of rise to be able to fund their healthcare costs. Is that a reality? And if we are going to course correct, how is your sector planning to do it? Siddharth?
I think Vikram, is slightly, I would say, on the opposite trend in the insurance sector for say, because if I talk about 2 years back, there used to be a very hard-coded fixed products, right? You could not change a product. Whatever was given as a policy was given as a policy. Either you take it or leave it. Now, I think over the past 2 years and 3 years, in fact, what has happened is there's a lot of modularization. There's a lot of innovation which is come in. Obviously, can it be better? Yes, of course. There's always a scope for a betterment. But what the insurance is moving towards is a lot of modularization. For example, I can decide the premium I want to pay. I can do away with the benefits. I can take the benefits. I can decide whether I want to. I'm a budget conscious customer. I'm okay. Let's say going to certain set of hospitals and not going to, let's say, the so-called premium hospitals. I am okay to have a slight, I'm okay to go for a single AC room. Or if I am, let's say, a customer who wants a complete peace of mind, I don't want to pay anything. I don't want, any hassles or anything. I can pay extra premium. I can go to the suite room in the hospital. I can go to, let's say, the top-notch hospital. So I think all that product innovation is something that is forming the core, because all of us have been talking about, any business cannot sustain on, let's say, just the 5% of the market.
So those chinks are appearing in the armor of the insurance sector as well. So Abhishek, when the kind of households that you are giving advice to, for them, for these investors, when they're planning now for the year that's coming up, 2026, what changes first? Is it going to be their spending habits, because you're seeing these costs go up? Is it going to be their asset allocation that is going to have to change? Do you see expectations now of how expensive city life is going to stay in times to come as well, and on the basis of which they're redrawing plans, as it were, and making the kind of changes like Siddharth is pointing out?
So our advice is always that asset allocation decision should be based on individual, say, time horizon or risk appetite. So that is something we do not suggest to change just because to achieve their goals, they should look for higher required rate of return. We focus on the returns that is expected based on their own risk appetite and asset allocation, which follows that. So that's answer the second part to it. With regard to spending habits, yeah, our idea is always to take a always hard look on, a lifestyle creep kind of situation where you're trying to increase your spend based on the kind of aspirations you have. So that is always a area that one should always be aware, so that they do not go overboard with their expenses and then find it difficult to balance their budget at the end of the year or month. So spending habit is something that is under their control. And that is what they should begin with, is always our ideas.
What about the policy side, Mithali, and the kind of push that needs to come? Has it something that we should expect from the RBI in the monetary policy, or should we expect from the government in the fiscal policy? How are we going to change this dynamic, as it were, the kind of variance that we see in the headline inflation and lived reality?
Absolutely. Vikram, I think it has to come on both sides. So on the monetary side and on the RBI side, definitely we need to have a relook at how the CPI is defined. And we can also have maybe two different indices, one for urban India and one for rural India, where the weightages are a little bit different based on, the baskets. And the one thing we haven't spoken about is education and the costs of going, school fees, which has also actually gone up hugely and makes now a very big basket, on the CPI. The second aspect is around governments and what can governments do on the fiscal side. And here, I think the investment in urban infrastructure, I cannot emphasize it enough, because think about it. Right now, everybody wants to buy a property, for example, which is in proximity of their office because of the commute time and the commute cost. Now, if you invest in a very resilient, say, metro system and bus services in the city, then automatically people can choose to live a little bit away and use public transport to commute to an office complex, and that brings down the rental cost, that brings down the travel cost, and that brings down the commute cost. So honestly, investing in resilient infrastructure and setting up residential areas, office areas, commercial areas, having more and better urban planning can actually bring down cost of living for common people. I cannot emphasize this enough.
So indeed, this is the bottom line. Inflation may be low, but affordability certainly isn't right now. Food prices have eased, like we pointed out, but the real pressure is on households, whether it's on rent, whether it's on healthcare, education, like Mithali pointed out, it continues to rise. All these pressures continue to rise faster than our incomes, and that's our reality. Is it a reality that we have to accept as a new normal? 2026 is here. What's really going to change? On the policy front, what should we expect from the budget? The monetary policy, the RBI, how much more should it consider when it really puts together its CPI? When you consider the services sector and the kind of pressures that brings on the inflation front, how much of that should be involved in the entire process? So tonight's discussion makes clear that this is not just a rate cycle issue, it is structural, about supply, about wages, and how we measure the cost of living. And unless those gaps are addressed, growth is going to look strong but continue to feel expensive. My thanks to our panelists, Gulam Zia, Siddharth Singhal, Abhishek Kumar, great to have you, Mithali Nikore as well, and we hope you have a fantastic year. I hope the tide changes and we don't, as part of our growth story, we don't feel the pinch on our wallets. That's going to be an important piece to track, and we'll continue doing that. And indeed, we wish you a great year ahead as we wrap up the last edition of the big question of the year 2025. We want to thank you for joining us through the year, and we promise to make it worth your while through 2026 as well. I'm Vikram Oza from me and the team. Happy New Year.